Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So, water freezes at 0 degrees Celsius, right? 32 degrees Fahrenheit. It's a law of physics, right? But you know what? Laws were made to be broken. Yes, generally speaking, water freezes at 32 degrees, but not always. Did you know that you can cool very pure, undisturbed water down to -5, -10, even -20 degrees Celsius, and it will stay liquid, not a hint of ice. But then if you just tap the container, just barely nudge it, or drop in a tiny fleck of ice, the whole thing will instantly crystallize and freeze in a flash. It's almost like it's disobeying the law of physics. The thing is, 0 degrees Celsius, 30 degrees Fahrenheit being the freezing point of water is based on some assumptions. There have to be some things held steady for this to hold true. First, it has to be normal atmospheric pressure. You can change the freezing point of water if you change the pressure. And number two, the presence of tiny impurities on the surface of the water called nucleation sites, where ice crystals can start forming. So in perfectly still, extremely pure water with no nucleation sites, if it's kept very, very still, the liquid can be cooled below its normal freezing point without forming ice. This is known as supercooling. But the moment you disturb that water or add even a speck of something solid, you give those ice crystals a place to start, and the system catches up to the physical law all at once. So I'm actually bringing up this physics point today to emphasize something important. Rules sometimes have exceptions, even quote-unquote laws of science. I'm a musician. And when I was younger, I was pretty serious about it. And I remember I was debating learning music theory. And I kind of thought it would be cool, but then there was part of me of the punk rock thing. I don't want to be I don't want to know the rules. And a friend of mine made a really good point. He said, you know what? You have to understand the rules in order to break them, in order to use the ability to break the rules in a way that will lead to something good and not complete chaos. And I think he was right. And so when we talk about laws of science or laws of economics, like supply and demand, sometimes we can bump into those exceptions. And I think silver may be bumping into one of those exceptions right now. And if it is, it's another extremely bullish factor. So the question that I want to explore today in the show is silver a Giffen good? Because it certainly seems to be behaving like one. And if it is, again, it's going to indicate a lot more bullish upside for the silver metal as we move forward. Now, you're probably wondering, what in the world is a Giffen good? What is Mike getting at here? Well, that's okay. I wasn't familiar with the term either until Money Metal CEO Stephen Gleason told me about it and said, hey, I think silver may be kind of behaving in this way. And so I dug into it and I did some research, and I think he's right, at least to some extent. But before I dig into this and I explain further, I do want to thank you so much for watching the show. Always means a lot to me that you spend time out of your busy day to hang out with me. I know there's a lot of stuff out there vying for your attention, and I really do appreciate the fact that you spend time with this show. If you want to help the show out, I would be very appreciative if you would share this episode. Write a little blurb, share it on your social media pages. And if you haven't done it already, if you would be willing to go to your podcasting platform and just write a short review, give us those thumbs up and those 5 stars. These things help grow the reach of the show. And if you think the content is valuable, then I'm sure other people will think it is too. And the only way they're going to know about it is if somebody shares it. So if you would do that, I would give you a great big thank you. So let's talk about Giffen goods. What is a Giffen good? Well, the name comes from Scottish statistician and economist Sir Robert Giffen, who developed the theory of Giffen goods. And in the simplest term, a Giffen good is an inferior good whose demand rises as the price increases. Now, of course, this is holding income and other prices stable, but all things being equal, a Giffen good will actually have stronger demand with a higher price. And of course, this defies the very fundamental laws of supply and demand, where increasing prices tend to lower demand for a good. So if silver does behave as a Giffen good, it means its up move, its rise in price, could be even more explosive going down the road. So let's explain exactly how silver may, at least to some degree, fit into the category of a Giffen good. Now, you notice that in the definition, I talked about an inferior good. A Giffen good is always an inferior good. Now, you might balk at the notion that, silver is inferior to gold, and I don't think it is. It's different. It has some different fundamentals. Its market is different, but I don't think it's inferior. Not in a subjective sense, but I'm not using inferior in that way. I'm actually using an economic definition, not a subjective description. So a good is considered economically inferior when demand for it generally falls as income rises, right? So think about meat and potatoes. Potatoes are an inferior good compared to meat because as income rises, a household typically is going to consume more meat and fewer potatoes, right? Potatoes are cheaper, and so therefore, as people are poorer, they're forced to eat potatoes. They would rather have meat. So if their income rises, then their demand for potatoes is going to fall. The demand for meat is going to rise. So potatoes are the inferior product. Doesn't mean it's necessarily bad. I mean, I love some mashed potatoes, right? Let's pair some mashed potatoes and some steak, and then we're really talking. But they are inferior potatoes in an economic sense. So conversely, when a household faces economic stress, it's going to typically try to substitute cheaper goods for more expensive ones, right? Well, I mean, we've all done this, right? We have a month where our income isn't as high as normal. Well, then, we try to substitute. We'll eat the beans and rice. So in a poorer household, a potato consumption may increase, and the amount of meat that is consumed is going to fall as that economic stress grows. And this is what is known as the substitution effect. So you're just substituting the cheaper good, the inferior good, potatoes, for the superior good, meat. And this is, again, the substitution effect. So in a Giffen setup, the income effect, and again, this is the way changes in purchasing power alter demand. You buy more meat when you have more income, more potatoes when you have less. That's the income effect. This is stronger than the substitution effect that we've already discussed. So to give a concrete example of a really good Giffen effect setup, this is the potato during the Irish famine. As prices rose, just generally, the Irish people effectively became poorer. And this includes the price of potatoes. And it made it impossible for them to purchase more expensive meat. So to cope, they had to buy even more potatoes, even as the price was rising, because it was still the least expensive way to get calories. So as the potato price was rising, demand was also going up because they were having to substitute potatoes for meat. So people were buying more potatoes, which creates this kind of vicious upward pressure on the price because demand keeps increasing. That increases the price even more. So you can see how this becomes kind of a cyclical upward spiraling effect. So we had a strong demand for potatoes even as the prices were climbing. So how might silver be set up in this kind of scenario? Well, as the price of silver has gone up, investment demand has increased sharply. And, we know this from data that we've gotten from Metals Focus, from other organizations that track silver demand. We know this just anecdotally from what we've seen here at Money Metals. Stephen Gleason, again, he's the CEO here at Money Metals. He said that as the price has gone up, we've seen a real strong demand increase for physical silver. Selling a lot of physical silver right now because the price is high, or as the price has been high, and selling has been, it's been there, but it's been basically stable for quite a while. So just from the effects, we see the price of silver going up. We see the demand for silver going up. I think it's a legitimate question to ask, is a Giffen mechanism at play? And I think I can make the case. So while people might prefer to buy gold, silver tends to be the go-to precious metal for many poor and middle-income investors because it's much less expensive than gold. You can buy an ounce of silver right now close to $60 an ounce, but still a lot more reasonable than an ounce of gold, which is well over $4,000 an ounce. And so a lot of people will, turn to silver. I've heard silver described as the poor man's gold. And I know people personally who intentionally invest in silver because it's a less expensive alternative. They can stack those ounces of silver much more quickly than they can gold. So you might think of gold as the meat precious metal and silver as the potato. Now, as I was talking about when I was discussing physical laws, these types of laws typically assume certain conditions are in place. And so we also have certain conditions that have to be in place for a given mechanism to really play out. So as I describe this, we're just going to assume that we have an investor who has a fixed monthly amount available to invest. And he would prefer gold as the superior investment. However, silver is much less expensive and more practical. And as a result, the bulk of his investment is in silver, even though really all things, being perfect, he would prefer gold. Now, that's not to say that he spurns gold altogether. He may occasionally buy a small gold coin when the price dips, much like a poor Irish family would occasionally eat meat even though potatoes dominated the diet. He might also trade silver for gold when he's stacked enough silver to make the transaction viable. I actually know people who use this as an investment strategy. They will use the strong upswings that we see in silver, and then once they feel like that's kind of at a top, they'll cash the silver in and then buy gold. So in other words, they're kind of using gold as an upgrade. So when silver becomes more expensive in relationship to gold, these dynamics can start to change. So as the prices of both metals rise, our investor's overall purchasing power falls. His fixed investment budget buys fewer total ounces of whichever metal. So in response, the investor is going to cut back first on the luxury item, buying even less gold. However, to get enough metal exposure, our investment will have to shift even more of his investment budget to silver despite the rising prices. So if this income effect is strong enough, the result is going to be growing silver demand in ounces, even though the relative price keeps increasing compared to gold. And, this dynamic seems to be playing out in India at this very moment. And, if you know anything about Indian investment behavior and Indian society, Indians love gold. Arguably, they prefer gold in most cases. But as the price of gold scaled record highs in October, many poor Indians found themselves priced out of that market. To continue to protect their wealth, they turned to silver. And this sharp increase in silver demand in India was one of the dynamics that drove the recent silver squeeze in London and helped push the price of silver over $50 an ounce for the first time ever. And I'll link to an article in the show notes page about that silver squeeze, and you can kind of read more details about how those dynamics played out. But silver demand really, really spiked in India, and a lot of silver was moving out of London, out of Shanghai, even out of New York to India. In fact, Money Metals sent 1,000 ounce silver bars over to London, over to India, several pallets of those. So we know that this demand spiked. And we also know from survey work that has been done by Metals Focus that a lot of Indian investors flat out said that they were pivoting towards silver because gold was just too expensive at the time. So the higher silver prices have been going, the more people seem to be chasing it. So this is the behavior of a Giffen good. And some of the dynamics, at least, seem to be valid when it comes to the silver market. Now, I'm going to grant you this is not a perfect analogy, right? Giffen goods are typically lower income necessities like potatoes, right? Gold and silver, neither one of them are essential for life, right? You don't have to have gold or silver to live. It's not like meat or potatoes, right? And a commenter on the article I wrote on this subject yesterday, he said that gold and silver seem to be behaving more akin to what is known as a Veblen good, Veblen. Again, that's the last name of the guy who came up with the theory. But a Veblen good is a luxury item that increases in demand as the price rises because people are drawn in by the status symbol of owning that expensive thing. So you can imagine like a Ferrari, the Ferrari goes up in price and some rich guy's like, oh, if I get this Ferrari, man, that's really going to be some high status. So these luxury items, they get more expensive. They become more desirable as a status symbol. That's a Veblen good. So, if you think about it, it's not unreasonable to think that there are some kind of Veblen effects, or at least something that looks like a Veblen effect in the silver market, right? As the price rises, people want to get on the bandwagon. But it's not really the same as a Veblen because they're not jumping on board because they think it's going to improve their social status. They're doing it because they see it as a better investment. So it doesn't really precisely fit that Veblen definition, in my opinion. Again, I don't think people are buying silver as a status symbol, and that's the central motivation driving Veblen effects. However, they may be buying because the higher price convinces them that silver is a better investment. So it is, grabbing their attention in the same way that the rising price of the Ferrari is going to grab the attention of the status seeker. So I kind of get where this guy is coming from. I don't think he's completely off base. But I think where he kind of goes off the reservation is he's defining gold and silver as luxury items, right? Veblen's are typically luxury items. And I think calling gold and silver a luxury is an overstatement. And I get why, as an American, we would see it that way. I think we do, as Americans, tend to view gold and silver as a luxury, right? We're gonna cut investment. It's gonna be one of the first things we cut if our budgets get tight. So in that sense, I get this idea that it is a luxury good. But, everybody in the world doesn't think in the same way as Americans do. And in many countries, particularly India, but also other Eastern nations, Asia, some of the Pacific nations, some of the Middle Eastern nations, they view precious metals as a necessity. And think about it. They are constantly fighting against significant devaluation of their currency, right? Some of these folks have dealt with hyperinflation or inflation approaching hyperinflation. I wrote an article this past week about how Iranians are using gold because their inflation is so high and they have to have something to protect their wealth. So it's a different mindset in other countries, right? Here in the United States, hedging 3% inflation may seem like a luxury move, but hedging against more significant currency depreciation, hedging against hyperinflation, not so much. Furthermore, in countries like India and many others, gold is intertwined with marriage ceremonies, religious and cultural rituals. It's part of the fabric of society. They view precious metals as necessities. It's not a luxury item. And you can see this in the patterns of gold ownership in India. According to a 2018 survey, 1 in every 2 households in India had purchased gold within the last 5 years. Overall, 87% of Indian households own at least some gold. Even households at the lowest income levels in India have some of the yellow metal. So poor people have gold in India, so not a luxury. According to the survey, more than 75% of families in the bottom 10% of income manage to buy some gold. Now think about that. Think about the lowest 10% of wage earners here in the United States. How many of them do you think are buying gold, particularly as an investment? And yet, more than 75% of the bottom 10% of families in India have bought some gold. In fact, around 2/3 of India's gold demand comes from beyond the urban centers, where the population is much poorer, where agriculture dominates the economy, and large numbers of people out there operate outside the tax system. And that's part of the reason that they need gold, because they can transact business and kind of stay under the radar. So gold isn't really a luxury, at least not in a lot of parts of the world. And we know from survey work done by Metals Focus, as I just mentioned, that Indians are actively substituting silver for gold right now. So the substitution theory is rooted in a very real idea. And remember, the whole premise of a Giffen good is that the substitution effect is overcome by, or the substitution effects overcomes the income effect. So regardless, whether it's a Giffen effect or a Veblen good, or maybe some combination of the two, we're definitely seeing demand increase as the silver price increases. And if this continues, we're going to start to get the same kind of upward spiraling price pressure that we see with the Giffen effect. And when you combine these effects with silver supply and demand dynamics, you have truly explosive upside price potential. Because as we've already reported on this show, and I've talked about it on the podcast a lot, silver supply is very restrained right now, okay? And I'll just go over some of this data real quick because I've covered it before, but it's important to reiterate. According to Metal Focus, silver is on track for its fifth straight structural market deficit. So, in other words, for the fifth straight year, we're going to see demand outstrip the supply. Metals Focus projects demand's going to outstrip supply by 95 million ounces this year. So that would bring the cumulative 5-year market deficit to 820 million ounces. That's an entire year of average mine output. So to put it another way, over the last 5 years, the world has used 6 years of silver mine output. And since 2010, the silver market has accumulated a supply deficit of over 580 million ounces. So a lot of people look at this and they see silver knocking on the door of $60 an ounce, and they think, well, that's really going to put headwinds up against demand, and the higher price is going to motivate miners to try to produce more silver. But quite frankly, neither one of these dynamics is guaranteed, right? If we have Giffen effects, well, demand is going to keep going up and get even stronger as the price goes up. And even with higher prices, it's highly unlikely that mine supply is going to quickly grow to erase that supply shortfall. When you look at the silver mine data, output peaked back in 2016 at 900 million ounces, and we haven't been to that level since. Up until last year, silver production had actually dropped by an average of 1.4% every single year. We actually had an increase in mine output last year, but it's nowhere near that 2016 level. We're talking about 814 million ounces of silver, so we're still almost 100 million ounces lower than we were back in 2016. So it appears that at least for the next several years, we're going to have to depend on drawdowns of above ground stocks to meet the supply of silver, to cover that supply deficit. And what I mean is, there's a lot of silver that's sitting in vaults, right? If you own silver, you've got silver sitting in vaults. What's it going to take for you to sell and release that silver to meet the industrial demand or the other investment demand? It's going to take a lot. It's going to require a higher price. So in order to release the supply that's above ground, we're going to need higher prices. So again, bullish for silver. I think it's fair to assume that rising prices are going to create headwinds for industrial demand. However, substituting silver in electronics applications isn't easy, given the metal's superior characteristics. Silver is the best metal for the job. Now, granted, they're going to try to find alternatives as that price goes up, no doubt about it. And technology being what it is, they probably will. But, looking at this year, even with prices up, almost 100%, Metals Focus still projects just a modest 2% drop in industrial offtake this year. And that's going to be offset by skyrocketing investment demand. So when you combine inelastic supply, inelastic demand with surges in both industrial and investment interest, plus the Giffen or the Veblen effect, you end up with an extremely bullish setup that, just a reasonable person is going to look at this and say, yeah, I think silver is going to probably get more expensive. Now, given this potential for more upside, you might want to consider getting some silver yourself, right? If so, we have some great deals right now at Money Metals. For instance, we have silver kilo bars at a very, very low premium right now. And junk silver, talking about those pre-1965 quarters, dimes, and half dollars that were 90% silver. Back in the day, the U.S. actually used to make real money. Quarters and dimes were silver. And then LBJ said, no, we can't do that. We're going to devalue this money. And so they took all the silver out. But you can still get those older quarters, dimes, and half dollars. We have them at Money Metals, and we actually are selling them below spot price right now. So it's probably the best way right now to buy silver. And I'll link to some of those specials in the show notes page. And of course, we're just a couple, 3 weeks away from Christmas, less than 3 weeks. If you're looking for some great Christmas gift ideas, check out our gift page over at moneymetals.com. You'll see a link to it at the top of the page. You can just click on that. And you're going to find some really cool gold and silver products, from jewelry to things like little silver building blocks, cool statues. You're going to find something that everybody will enjoy. And, ain't nothing wrong with just giving somebody an American silver eagle or American gold eagle coin, if you want to go real big on your Christmas presents. But some great gift ideas, things that, people aren't going to take them back. You give them real gold, real silver, real money, not going to take it back. I would argue that giving gold and silver is even better than sticking cash in a card because, in a year, that cash is going to buy a lot less than it is today. But if you give the gift of gold or silver, it's almost certainly going to be worth more in a year as the dollar devalues. So check out those specials over at moneymetals.com, or give our precious metals specialist a call, 800-800-1865, and get some gold and silver today. Before I close out, I want to touch on another reason I'm still very bullish on silver, and that's because I'm very bullish on gold. There are some commentators out there in the mainstream who are warning that the bull market in precious metals may be coming to an end soon. I saw an article, I think it was in the Financial Times this morning, talking about how investors are driving gold to bubble territory, and they're starting to do the scare tactics, which I kind of think is the people who push paper. They don't like gold and silver, and so they're constantly trying to run it down. I think there's a little bit of that going on, because the fundamentals that have driven gold to new records and have driven silver to new records, those things remain in place, right? That silver supply deficit, it's not going away anytime soon. The Fed is still easing monetary policy, right? We have a Fed meeting that's going on right now. The consensus is they're going to cut rates again. Now, if you remember at the last meeting, Jerome Powell was like, no, we may not cut rates. He tried to be really hawkish, right? He tried to tamp down those expectations. And yet here we are in December, and everybody thinks we're going to get another rate cut. And, the Fed usually delivers what the markets are expecting. And of course, I'm almost certain he's going to come out again and say, we've got to be cautious, and we may not cut again for a while. It's all talk. Watch what they do more than listening to what they said. But anyway, lower interest rates are bullish for gold and silver, and the economic environment being what it is, we need lower interest rates. That's why everybody's pushing for it, and the Fed is going to deliver it despite inflation. So that's in place. We still have the giant debt black hole that I've been talking about, warping the economy, making a lot of people very wary of the dollar again. Driving the desire for artificially low interest rates so people can cope with the debt black hole. And of course, the debt black hole was created by artificially low interest rates to begin with, but, never mind. We need more of it, right? We still have strong central bank gold buying, which has been one of the demand factors that has supported the gold market over the entirety of this bull run. Speaking of those central bank gold buyers, I report on central bank gold buying every month over at moneymetals.com/news. But I don't generally go over the data here on the show because I think it's a little dry. And again, it's every single month. But I thought I would close out today by highlighting some of that October central bank gold data, because it gives you an indication kind of the fact that that gold demand is still there. And I think the fundamental reason that central banks are buying gold are the same reasons that you need to think about buying gold. They're worried about the devaluation of the dollar. They're worried about the constant depreciation of the U.S. currency. They're worried about the inflation. So they're buying gold, and they're shielding themselves or trying to shield themselves from that. So if you look at the central bank gold data, it actually slowed down a bit earlier this year, but the pace has picked up over the last couple of months. In fact, central bank purchases hit the highest level of the year in October. Central banks globally increased their gold reserve by 53 tons, that's net, in October. And that was a 36% increase from September. Now think about that a minute. Central banks bought 53 tons of gold. That's a lot of ounces. So you can see how this constant buying by these central banks, again, which has been going on for years, it is kind of underpinning and supporting. It's a pillar of support for the gold bull market. This October central bank gold buying built on a really strong third quarter, with official reported purchases coming in at a net 220 tons. And that was up 28% from the second quarter, and it was 6% above the 5-year third quarter average. And it's important to note as well that when we talk about central bank gold statistics, there is a lot of central bank gold buying that goes on kind of under the table that's not captured in this official data. And the World Gold Council knows this. And at the end of the year, they actually try to estimate the unreported purchases. One of the central banks that is doing a lot of unreported gold purchasing is China. And Jan Nieuwenhuis, who has done some fantastic work for Money Metals, has kind of chronicled and been able to come up with a pretty accurate estimate of just how much gold the Chinese are buying off the books, right? Every month we're hearing, oh yeah, China's bought more gold, another 5 tons. They're buying a lot more than that. And Jan has showed that. I'll link to an article in the show notes page as well from him if you want to kind of dig into that. It's also interesting to note that since Jan started reporting on this, it's actually been picked up by the mainstream. We've seen articles in some of the bigger financial papers now about Chinese gold buying. So anyway, the World Gold Council said that this pickup in central bank gold demand in the third quarter, quote, is evidence that central banks continue to add gold strategically despite facing higher prices. And as I already mentioned, central bank gold buying has slowed somewhat this year. The big jump in September and October notwithstanding. But despite the slowdown, the World Gold Council is still bullish on central banks. Quote, we maintain our view that central banks will continue to add gold to their reserves. Our Central Bank Gold Reserve Survey 2025 shows that respondents overwhelmingly, 95%, expect global central bank gold reserves to increase over the next 12 months, while 43% believe that their own gold reserves will also increase over that same period. Notably, none of the respondents anticipate a decline in their gold reserves. So, on net, central banks officially increased their gold holdings by 1,044.6 tons in 2024. That was the 15th consecutive year of expanding global gold reserves. Last year was the third largest expansion of central bank gold reserves on record. It was just 6.2 tons lower than 2023 and 91 tons lower than the all-time high that was set back in 2022. And 2022 was the highest level of net gold purchases by central banks on record, dating back all the way to 1950. That includes the suspension of dollar convertibility into gold back in 1971. So you can see just how aggressive central banks have been in buying gold. To put that into context, central bank gold reserves increased by an average of just 473 tons annually between 2010 and 21. So it's more than doubled over those last 3 years. World Gold Council analysts said, quote, central banks are likely to continue their buying spree, calling central bank purchases surprisingly resilient given the rapid price increases. And the World Gold Council also noted that diversification of reserves with, quote, a reduction of U.S. assets, unquote, is one of the factors driving central bank gold buying. In other words, we're talking about de-dollarization, Goes back to what I said just a minute ago. People are worried about the devaluation of the dollar, about inflation. Other countries are also worried about using the dollar as a weapon, so they're getting rid of the dollars. And there's no reason to think that this is going to change anytime soon. The World Gold Council doesn't think so. They said, we don't see an end to this narrative unless there is a material shift in geopolitical tensions. The IMF has downgraded growth prospects in the U.S. more than any other major economy, citing policy uncertainty. This suggests that other countries may have leverage in negotiations, although these typically last months and years, not weeks. Hence, we don't expect any near-term resolutions. So it's talking about the trade tensions, the tensions that have grown as the U.S. and its allies have aggressively used dollar assets as a foreign policy tool. None of this is going to change. So as I often say, the policies that are creating this bullish environment for both gold and silver aren't going to go away, right? Your representatives aren't going to wake up tomorrow and say, hey, I think we should slow down on this money printing and currency depreciation. No, they're not going to do that. Or, hey, we really are going to deeply cut spending and get this debt under control. They're not going to do that either. I mean, they may say it, but they're not going to do it, right? You can't vote these problems away. You can't wish them away. They are ruining your money. I say this all the time. They are devaluing the dollar every single day as a matter of policy. The question is only how quickly are they going to do it? Sometimes they do it fast. Sometimes they do it slow. The pace of dollar devaluation seems to be quickening. And that's why every week at the end of the show, I suggest that you might want to think about getting some real money, gold and silver, that will hold that value over time, that will protect your wealth from these government policies. And of course, you can get all the gold and silver you can afford, all the gold and silver you want at 800-800-1865. And, if you're thinking, I can't get into it right now. I don't have the money to invest in gold or silver. It's too expensive. You can build a precious metals portfolio over time through our monthly buying plan. You can use as little as $100 a month, and we will add to your silver and gold stocks as you direct us over months. And so you don't have to buy full ounces of gold. So check that out. I'll link to that on the show notes page as well. But you got to act today, right? It's not slowing down. So call 800-800-1865. Talk to a precious metal specialist. If you don't like talking on the phone, you don't have to. You can go to moneymetals.com and chat with a precious metal specialist right online. Or, if you know what you want, you can just go to moneymetals.com. You can click on whatever it is you want to buy. You can get it right there on the site. We'll ship it to you, or we can store it in our state-of-the-art bullion depository. So do it today, 800-800-1865. And with that, I'm going to call that a wrap for this episode of the Money Metals Midweek Memo. You can get a lot more information on everything that I've talked about on the show today and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold, silver, right in your inbox, make sure you sign up and get on our email list. Now, of course, you can subscribe to the Midweek Memo podcast on your favorite podcasting platform. And when you do, you'll also tune into our Market Wrap podcast that comes out every Friday, where you get a quick overview of the week in precious metals, along with conversations between yours truly and interesting people from the world of gold, silver, economics, and investing. This week, I spoke with one of the folks over at the World Platinum Investment Council about platinum investment. So that's what you can look forward to this Friday. Thanks for listening to the show. Again, I really appreciate it. I hope you have a fantastic rest of your week, and I'll talk to you again next Wednesday.